Welcome to Business Chronicles by Mauritius Capital Tax,
a monthly talk show providing you with the latest insights and updates on businesses and taxation in Mauritius and also across Africa. I am Pallavi Agnihotri.
I'm Roby Tharanee.
And we are thrilled to be your host to kick off the very first episode of Business Chronicles by Mauritius Capital Tax.
Let us dive right in. Our first edition comprises of 3 parts. And our first invitee can be none other than the Managing Director of Mauritius Capital Budgetary, Oshan Natu. Oshan brings with him more than 25 years of experience, both from the banking and global business sectors. He will give us his perspective of the financial services industry in Mauritius. The Managing Director of Mauritius Capital Tax, Ryan Alas, will share with us the latest trends in the tax landscape. Welcome, Oshan, to our first ever Mauritius Capital Talk Show. Glad to have you here.
A pleasure is mine.
As an experienced leader in the financial services industry, I'm sure you have a wealth of knowledge to share with us today. We are very excited to delve into our very first business chat with you. So, Oshan, given your extensive experience in the financial services sector, how, according to you, the financial services sector has developed over the 30 years journey and with a specific attention to the global business sector?
Okay. Thank you again for having me. It's a pleasure to be here, especially it's your first edition of the Business Chronicle. So if I may just go back in time. So 30 years ago, financial services was less than 5% of our GDP. Wow. Now recently, it's plus minus 15%. So quite a big jump in the contribution of financial services to our GDP. And the boom really started with the global business sector, which really was launched about 30 years ago in 1992. We were blessed in a way that at the same time of the launch of our financial services sector, India was opening up to FDI, foreign direct investment. And we were lucky that we had a very good tax treaty with India, double taxation avoidance treaty. So investors worldwide were looking for a convenient location from where they could invest into India. And Mauritius came up naturally at that time. So the investors were looking for certainty and incentives, tax incentives and others, and we had both at that time. So this started the boom years of investment through Mauritius into India by international investors. Over the years, then, the treaty was challenged quite a few times. And there was a need for diversification, both in terms of markets and products. Okay, so I would say let's say about 20 years ago, the diversification process actively started, both in terms of markets, like I mentioned, and in terms of products. So if you look at the positioning over the past few years, in 2021 actually, there was a study which was done by Capital Economics, and which found out that in 2021 or the year immediately before that, the total FDI going from Mauritius into Africa represented 10% of the total FDI going into Africa. That's quite a large amount for a small country like Mauritius.
And that's in 2021. Actually, it's very recent.
It's very recent. It's very recent. And what's interesting is that Mauritius was being used for investment not only in countries with which we had tax treaties, but also with other countries. So there were other reasons or other imperatives why those international investors were using Mauritius to go into Africa as well.
So we must say the attraction was there.
The attraction was certainly there. So now, in terms of geographies, I think we are quite diversified with a large chunk of investment going from Mauritius into Africa. We still invest massively into India, I mean our global business sector, and then other regions of the world. So I must say that these days the the global business industry is one of the fastest growing industry in the country, which employs over 17,000 professionals in the sector directly, which is massive for a country like ourselves. So it's been a diversification through geographies, but also a diversification through products. So now, for example, we have set up wealth structures, trusts, foundations, etc., for our international clients. So mostly African and Asian clients as well. Insurance structures for those different clients. So it's been quite a nice, impressive journey, which has been that of the Mauritius financial services industry. Helped obviously initially by the India-Mauritius double taxation avoidance treaty, but over the years it has evolved. And in recent years, what has been a very good addition is the fact that now international businesses are using Mauritius more and more in terms of actually setting base here, having more substance here, employing people here for their global operations. So this is a welcome addition again in the development of the industry.
But can we say that our main focus right now is Africa and Asia?
Yes.
And not other countries?
It is mostly, I would say, Africa and Asia. We have a natural affinity towards those countries, but it is very much so. Although in terms of investors, they come from around the world. But the focus in terms of target investments and places where business is done is mostly Africa and Asia, I would say.
But we're very well known, I must say, we're actually known as the financial hub of Africa, aren't we? So being a very impressive financial sector and markets, especially global business, that must be, we must be very proud of that, shouldn't we?
Absolutely. I mean, if you look at the journey so far, from where we were, almost zero, to now, I think there's a lot of reasons to be proud about the sector. But the road ahead is obviously full of obstacles, full of challenges, but also very exciting as well.
So our next question would be, according to you, what are the key attributes that Mauritius has as a trusted and modern financial centre?
So earlier on, I mentioned that about 10% of the FDI going into the African continent as a whole goes through Mauritius, and that was the statistics back in 2021. And one key feature of that was that it's not in countries where we have tax treaties, double taxation avoidance treaties. It's with other countries as well. So there must be other imperatives, other reasons why those international investors would choose Mauritius. So I would say 4 or 5 of the key attributes that immediately come to my mind. Firstly, I would say location and natural affinity. You know, we are very close to Africa, for example. It's a bit like, you know, we are a natural sort of platform for investment into Africa. It's a bit like Luxembourg is a natural platform for Europe. Hong Kong is a natural platform for China, Singapore for South Asia. So because of the traditional business cultural links that we have with Africa, we are the natural location. We speak French, for example. Mm-hmm. Many countries don't speak French, I mean, offshore jurisdiction. We do that, and in Africa, there are quite a number of countries which speak French. So I would say the first one is that we are the platform for going to Africa.
And I think it's very important that we're a bilingual country.
Yes,
and
absolutely. People in those countries can relate to us. We speak their language. We understand Africa, and that's extremely important.
But maybe we can try to expand our horizons and target other like Europe countries.
Yes, we could do that, but I would say that we can't be everything to everyone.
Yes,
I think we should focus in certain specific markets where we can really make a difference, and we have USPs, if I may call it that way. We can differentiate ourselves, and that's why we've been relevant to both India or certain countries in Asia, as well as a lot of countries in Africa. So sort of location affinity is one characteristic. I think that the second one is obviously economic and political stability. We are able to provide that. We have been independent for more than 50 years now. We have a strong economy. There are no exchange controls, for example, in Mauritius. So that's a key element because we need to provide that comfort to investors for them to use us to target those investment countries.
And after all, if they're not comfortable, I don't think they'll be willing to invest and spend, it's not only invest and spend their time in a country where they don't feel at home. Let's say.
Where they are not comfortable, they don't feel secure. And I think a third attribute that comes to mind is probably our strong legislative framework and our flexible business law. This is extremely important. For example, the Ultimate Court of Appeal of Mauritius is the Privy Council in the UK.
That's correct.
So that gives people additional comfort, especially institutions when they have to lend to Mauritius companies. They are able to use Mauritius law as the governing law, so that's key. Contracts can be drawn under the Mauritius law. So these are some of the key features. Others that probably come to mind is obviously that we have a skilled workforce in the country, which is available at a competitive price. Let me put it that way. So that's another factor. And a final feature that comes to mind is in terms of compliance with international norms, whether it is AML, CFT requirements internationally or tax requirements, etc. I think we've checked all the boxes. We are compliant with much of the requirements of both the OECD and the EU, and that's a big plus for us, for international investors and traders using Mauritius.
So you mentioned a range of attributes just right now. And do you think that they are both relevant for African and Asian market?
Absolutely.
And why do you say so?
Okay. So I would think that business people, whether they are Asian or they are African, they speak the same language.
Exactly.
Yes,
they have the
same
same
mindset.
expectations. Okay, so there are things that they would expect to see, and they deserve that special sort of treatment or attributes to be there for them to come, whether they are African or whether they are Asian. Obviously, there are certain key cultural differences between people from Africa or from Asia. But let's not forget, we are ourselves a nation of immigrants.
Exactly.
We come from different continents, our ancestors. So we are mindful and we are sensitive to those cultural differences. I think we are sufficiently agile and are able to adjust that way, depending on the different types of clients or the people whom we are dealing with.
So our, let's say, put it that way, our multiculturalism is let's say one of the key factors to attract people in Mauritius, because we very much adopt their mindset.
I would say that because we are multicultural, we attract people. The way I would put it is probably that we are able to adjust to people's requirements. We are mindful of cultural differences. So it's easier for us as opposed to, because we live in a multicultural society to start off with.
So we have spoken about the positives of the Mauritian financial sector. So according to you, what are the challenges you think that Mauritius is facing?
Okay. So I think one of the biggest, if not the biggest challenge that we are facing right now is the pressure on talent. So business is growing nicely at a steady pace, but our talent pool is not enough or growing fast enough to be able to match that business growth. So this is a real problem across the industry. It's not only for Rogers Capital, it's across the industry in Mauritius. And it's not only, I mean, I must say maybe there, we've been a victim of our own success, if I may put it that way. Business has been good, but talent pool has not grown. So it's not a problem only across the industry in Mauritius, that is with people probably moving around, but it's also offshore jurisdictions which are targeting our talent pool in Mauritius. So people are moving from Mauritius and going to places like Luxembourg and the Channel Islands, etc. So this is a major issue, a major challenge that we have to address if we are able, or if we want to realize our ambition in the financial services industry, and if we want to continue growing as we have been growing in the past.
So you just mentioned that there's a mismatch of talents. What, according to you, are the skills one should really possess to outperform or to eradicate that mismatch of talents?
Okay. So there is no quick fix solutions to address that major challenge that we are facing. But we at Rogers Capital have embarked into a program of digitalization and automation, which has been running over the past 2 to 3 years. This is one of the ways that we are using. It's heavy, massive investment that we put into that to reduce the dependency on volume people in terms of volume talent. So this has been around, this program and this process of automation and digitalization has been around for a few years now. Hopefully, we are going to see the benefits and the dividends being paid out over the next few months and over the next few years. And I must say, if as an industry, as a whole, we are not able to address that challenge, that would greatly compromise our ability to grow and our ambitions for the industry.
And to retain talents.
And to retain talents, absolutely.
So how would you promote Rogers Capital Fiduciary and attract young talents to the company?
Okay, so there are various programs that we put in place to attract and retain talents within the organizations, whether they are young, experienced, and mature talent. One of the programs and initiatives that I'm especially proud about is the Accelerate Young Graduate Scheme. This is basically a scheme that we put in place to attract university leavers, young graduates, to come and join us. So we take them through a program of at least 6 months of rotation in various business segments within the organization. So they get to learn the ropes in various sorts of lines of business that we are in. And it's been quite successful. So last year we started it. We had our first batch of graduates. This year, beginning of this year, we had a second batch. And we plan to renew and repeat by the end of this year with another batch. So it's about intensive training within the different business segments of the organization. It's about coaching and mentoring. We craft and tailor a specific program for each person as soon as they join in, so that they are well surrounded. And at the end of that training period, we are able to offer them a full-time position within one of our business segments, which they can choose, and with the help of ours, we look at where they have a natural affinity, where they are able to bring more value, and they would join that section or department. So this is one of the many things or initiatives that we are doing to attract, retain, and grow our talents.
So they have the opportunity to work in different departments.
Yes. So that's very attractive to the people. So because normally when they come into the job market and they join an organization, it's to work in a specific sort of business segment or line of work. Here they have a variety. They are able to experience those different business lines and types of work. And in the end, obviously, where they are more excited and they're more sort of capable of delivering, they get posted and become permanent in that section.
Recently, the budgetary measures for the year 2023 and 2024 were announced. What are your views on that?
I think the Minister of Finance has, in his budget speech, tried to maintain the balance between the need to enhance or retain the attractiveness of the Mauritius International Financial Center, as well as the need to strengthen our AML, CFT, and other compliance frameworks so that we are in line with international norms and the expectations of international institutions such as the OECD and the EU. So I think it's a commendable agenda. Obviously, the devil is in the detail, that now we have to look at the specific legislation to make sure that we maintain that equilibrium and that we retain our commercial pertinence to international investors and business people, as well as the requirement to have a legislative framework which is robust and which is international, in accordance with international norms and acceptable to international institutions. So that's a careful balance that has to be worked out when the actual law comes out. There are obviously certain specific changes in the legislation, which I think goes along the direction of making sure that we are further enhancing the attractiveness of the sector. And here I'm reminded of, for example, the increase of scope of the variable capital company, which can now be used for family office business and private wealth management business. So that's a welcome addition. And also in terms of taxation of collective investment scheme, closed-ended fund, where interest income will now be subject to tax at an effective rate of only 0.75% compared to effective rate of 3% or more in the past. So these are welcome changes, which obviously make sure that our sector remains attractive to businesses, but to make sure also that we comply with international norms and international requirements.
So thank you, Roshan, for coming on this platform, our first ever talk show, Rogers Capital Tax Talk Show, Business Chronicles. Thank you for your time, for answering our questions, and it was a pleasure having you.
Thank you for having me. The pleasure was all mine.
Thank you very much,
Thank you.
Roshan.
Thank you very much.
Welcome, Ryan. We're excited to hear from you the latest developments in the tax arena.
Thank you, Pallavi and Roby. Today, I would like to update our viewers on a recent decision of the Assessment Review Committee in the case of Top FM Limited and the Director General of the Mauritius Revenue Authority. The case is about whether, in the case of a takeover or merger, losses can be carried forward and only under Section 59A of the Income Tax Act, or it can also be carried forward under Section 59 of the Income Tax Act.
Can you give a brief background of the case for our viewers?
In fact, Top FM Limited amalgamated with Skywave Limited to become the surviving company. There has been no change in the ultimate beneficial owner of the company. Both Top FM Limited or Skywave Limited. Top FM Limited carry forward the tax losses of Skywave in its own tax return.
What was the point in dispute between Top FM Limited and the MRA?
The point in dispute was whether Top FM Limited could carry forward the losses of Skywave Limited in its own tax return. In fact, according to Section 59 of the Income Tax Act, which is a principal section for the carry forward of losses by companies, a company can carry forward losses up to 5 succeeding years where there has been no more than 50% change in the ultimate beneficial owner of the company. We have had the introduction of Section 59A of the Income Tax Act afterwards, which is targeted mainly in case of takeover or mergers. It is mainly targeted towards ailing manufacturing companies, and it also enables companies to carry forward losses where it is in the public interest. Normally, the approval of the minister is required for the carry forward of losses. In fact, the MRA was of the view that Section 59A is applicable where there is in all cases where there is takeover or merger. That is, Section 59 is no longer applicable in that case. But the Top FM Limited was of the view that Section 59 of the Income Tax Act is a principal section for carry forward of losses, and Section 59A is only applicable where a taxpayer do not wish to take benefit of Section 59 or cannot take benefit of Section 59.
So what was the decision of the committee?
In fact, the committee found that by operation of the law, Top FM Limited succeeded to the rights, privileges and liabilities of Skywave Limited. Therefore, the losses incurred by Skywave Limited can be claimed by Top FM under Section 59 of the ITA. The company also found that Section 59A is a derogatory regime which enables companies in case of takeover or mergers to carry forward losses, even where there has been more than 50% change in ultimate beneficial owner. Moreover, losses which normally expire in 5 years are deemed under Section 59A to be incurred in the year of amalgamation or takeover. Therefore, Top FM Limited in that case was able to carry forward the losses of Skywave Limited.
Well, thank you, Ryan. Very interesting case indeed. We look forward to hearing from you very soon on any tax updates.
Roby and Pallavi, the pleasure was mine. I look forward to the next show.
Thank you.
Thank you, Ryan.
Now that we have just entered a new fiscal year, let's provide our viewers with a small overview of the Mauritius tax requirements.
Absolutely, Roby. Starting from the beginning, do you know the difference between the tax year and the year of assessment?
Enlighten us.
Well, the tax year refers to a period in which a taxpayer earns income and incurs expenses. In Mauritius, the tax year runs from the 1st of July to 30th June of the following year, whereas the year of assessment is the period in which the tax liability is calculated. And here we are taxed on a preceding year basis. A bit confusing, isn't it? Let me give you a simple example. The net income derived during the tax year 1st July 2022 to 30th June 2023 will be taxed in the year of assessment running from 1st July 2023 to 30th June 2024. That is called the year of assessment 2023-2024.
So now we've got this right, we understand that the corresponding tax has to be paid within specific timelines. So let's move on to the important tax deadlines in the month of July 2023. First, there is the filing of the annual returns for companies, trusts and foundations with a year end falling in the month of December 2022. Normally, those returns should have been submitted by the 28th of June 2023. However, the Tax Revenue Authority, the MRA, has confirmed that for those entities which are in a loss position or have no tax liability, they can proceed with the filing until 14th of July 2023. So hurry up.
That's right, Roby. And next, we have the filing of annual returns for companies with an accounting year end of 31st January 2023, as well as the advanced tax return submission, also known as the APS statement for the quarter ended 30th April 2023. The deadline for same is 31st July 2023.
Exactly, Pallavi. In summary, the APS submission concerns companies with a year end of 31st of January 2024, 31st of October 2023, and 31st of July 2023.
And lastly, we should not forget that the usual filing of tax deduction at source, pay as you earn, all social charges, including contribution sociale généralisée and value-added tax return for the month of June 2023 should also be done by 31st July 2023.
The closure of the income year 2022-2023 comes with several annual filing obligations to the MRA. These must be fulfilled by 15th of August 2023 and relate to annual TDS and PAYE returns, return of dividends, statement of life insurance premium, statement of donations by approved charitable institutions.
Yes, Roby, and employers should not forget to issue the statement of emoluments to employees and directors. and taxpayers should send the certificate of tax deducted at source to these payees. Oh, and one last. The statement for purchases of goods and services has to be submitted by 31st August.
Well, that was very comprehensive roundup, Pallavi. Thank you.
It's crucial for our viewers to stay on top of these deadlines to ensure compliance with the tax authorities and avoid unnecessary penalties and complications.